Hey guys, Jeff Wild here. I want to share my thoughts on what's been happening, all the craziness in AMC and GME over the last 24 hours. And for those of you who don't know me, I've been trading over 20 years, so I've seen a lot of situations like this. Not necessarily this crazy in one day, but with that said, things repeat over and over again. I started trading in the late 90s. Okay, so I kind of lived and traded through the stock market bubble of the late 90s into 2000, 2001. So I want to share my thoughts and some quick tips on how you can position yourself. Now keep in mind it's 7 or 8:20 a.m. in the morning New York time, so the market's not open for about another hour. But let me give you my take. So we're going to start on GME. I am on a 5-minute chart. Now I'm not showing the extended hour trading. This is where the market closed yesterday, which is way down about 212, right? But you can see up here on the bid ask, this is currently where the market's actually trading, like 336, 338. So my first thoughts are, is the price, remember it's like 338, 340, is it up here because more of the people that were shorting the market are covering? In other words, when they short the market, when they cover their positions, they have to buy back their positions, which is going to make the market rise. Okay, so we won't know till the market's open whether this short covering and then the shorts start shorting again to take it lower, because what they're going to want to do, keep in mind these institutions have deep pockets and they're going to screw all of us, the small retail traders, right? They're going to try to shake our confidence, shake us out of our positions, drive it all the way down here. Now, if we go to a 15-minute chart, we can get a little bit better perspective where the stock has been. I mean, it's absolutely crazy to think just a few days ago it was at like $100 in this area, and it went up to almost 500, right? And then it dropped almost 400. I mean, this is about as wild of a roller coaster as you can get. It's very scary if you're in it, especially if you bought it up in here thinking it was going to go way higher. So what do? If you have faith in the long-term prospects, then you can look to position yourself. Don't take a big position. In other words, you don't want to risk your last dollars on this thing, or if you've got to pay your rent, don't blow all your money on some stocks. But with that said, if you feel good about it, and say the market opens up like 350, 300, take a nibble. Okay, but bear in mind that from a technical point of view, the major support is down below this swing low here at about $115, and a lot of support, and you can always tell where the support is when the market kind of danced around a level. In other words, over on the left side here, it hit resistance, it went sideways for a while, went above it, then it found support there for a bunch of hours, right? So there's a high probability that if the short sellers gain control, they're going to take it back down here. Okay, then they're going to be very happy. They'll cash out, and that can create another short covering rally from here. So if you want to be conservative, you can wait till the market starts to get in this area, then buy, because think about it, you're buying it way, way cheaper, much bigger discount down here than if you just kind of got in. Let's say the market does open up at 320 or something like that. So the battle always is, the FOMO, fear of missing out. You think like, oh God, if I don't get in when the market opens up and the price is here, I'm screwed. I'm going to miss the freight train up. But then the flip side is you could find yourself in a scary position where the short sellers do come in. All right. So there's no one answer. You have to figure out what's best for your risk appetite. But from a technical point of view, these are the areas I would be looking to take nibbles in if the market starts to sell off. So let's look at one more, because everybody's been trading this one as well. AMC. Crazy, crazy, crazy too, right? It was down at like less than $5 over here, and then within one day, it's up 400%, right? And then it gave almost, what, 70, 80% back. So right now, the market has significantly recovered from this position, this close down in the $9 range. It's up about, you can see up here, like $12.26. So it's up here. Once again, don't know if it's rising because the short sellers are covering, making the prices go up. But if you want to be on the more conservative side, let's just kind of squash this together a little bit more. Major support down here in this range. And also consider too, the market loves big round numbers, so like $5. So it very well could come back to this area because it likes that big $5 number. And it's no coincidence that this was resistance for a bunch of hours because it was trying to get through that kind of glass ceiling of $5. At that point in time, $5 seemed like a high price. All right. But now that we've really busted through, that can be the floor of support. So if you want to be conservative, wait till it kind of see if it can come down here. And then just to wrap it up, once again, you have to decide, are you experiencing FOMO, fear of missing out? Yes, the market could open up in this area and then it just takes off and you miss out. But you have to decide whether you want to take the risk and be a speculator or be more conservative. There's no one right or wrong answer. It's just, where you want to pick your position to get in. So anyway, I hope that helps you, and we will see you when the market opens.